We're going to speak about TSLY, which is an options income ETF that is based on the Tesla stock and is provided by YieldMax. Now, without any further ado, let's get straight into the video. So what is TSLY? TSLY is an options income ETF that's based on Tesla, the car company. For those of you that don't know what Tesla is, you probably should. But the fund earns income by writing calls and puts on the Tesla stock. An important note from YieldMax: principal loss is possible. However, this is just kind of a blanket statement that they say with all funds, because with any stock, principal loss is possible. However, they also state that shareholders are not entitled to any dividends paid out by Tesla, which is also not a concern because Tesla doesn't pay out any dividends. However, if there is ever a special dividend, they're not going to pay it to you. So they kind of have to put that in there to state that it is something that they don't pay. Now, if we look at the fund's holdings, this is interesting because, as I said earlier, it is an options ETF, so they purchase calls, put options, short call option contracts, and they also buy treasury securities and cash. Now, something important to note is the treasury securities and cash that they do purchase are just collateral that they have. Now, most of their income is generated from these contracts, and they have the maturity of between 6 months to a year, and for the short call option contracts, they have the maturity between a month or less for their expiration dates. Now, they state a dividend of around 70%, sometimes, or 50%, and I think it's really imperative for people that are investing in this income ETF and any other fixed income products that derive income from, options. It's important to actually look at the last distribution, which the last declared distribution that they had was actually declared yesterday, November 7th, 2023, the ex-dividend date being today, and the recording date being tomorrow. And the dividend is set to be paid on the 16th of this month. Now, when we look at this distribution, it's about 58 cents. And if we take that into consideration and multiply that by 12, we get about $7.01, which if you divide that by the current share price, if you were to buy it as of today at this price, you're looking at 59.7% dividend yield, which is enticing. However, this could be a yield trap, and I'm going to get into that shortly. But first, let me tell you what I would do. Firstly, if we're looking here, we're down about 41% from the inception of the stock. Now, why this is kind of concerning is because Tesla, in the same amount of time, has gone up, and I'm going to show you that shortly. Here are my thoughts. Now, this fund is a great thing to purchase if you can get into an opportunity where the stock is at an all-time low, and you can purchase it at the all-time low, and it shows, potential of going up. So currently, the way things are, if it's around 11.75, if it goes down around 5% more, I would say it's a good buy, and you have, 10 to 20% upside, and you're getting a 6% dividend per month. And in the other case, if you're not comfortable buying a stock that moves this much, what you could do is you could swing the trade volatility, because the stock moves between 1 to 5% every single day, either upwards or downwards. I'm not too sure if you can buy options contracts on an options ETF, which I would presume you cannot do. However, you can make money swinging the stock when it does do these little swings up and down, which gives you potential profits when you see that there's about to be a reversal upwards. So that's another case scenario where you could make money on the stock. Now, like I said earlier, if we look at Tesla and TSLY next to each other, it's a bit concerning because you see on the left-hand side, we have Tesla, which in the past year, from the same exact date, if we look on TSLY, has returned about 25%. Whereas, like I mentioned earlier, TSLY on the share price value has returned about 41%, not including the dividend. However, now we're looking at this one-to-one against each other. Tesla at 25% return year over year versus TSLY, which is negative 41 on the share price. 57% average dividend as we calculated earlier, which gives you about a 16% return year over year, which would look nice. However, a lot of people forget about the taxes. So you're looking at maybe 13%, depending on your certain tax bracket, if you're going to take these dividends and how much you make, like I said earlier. But, it is concerning. But regardless, I think if it were me, I gave the two ways that I would purchase this stock if I were to make money on it, and what I would do. And I would personally, if I was a buy and hold investor, I would probably just purchase Tesla, to be honest, and not hold on to this long term. So thank you. Like and subscribe for more videos, and we'll see you guys in the next one. Thank you.